Traders, welcome back. I appreciate you guys joining me today. It's another time for that video of this time of the day. I just want to let you guys know thank you for joining me, and I have an awesome video for you guys today. I really want to go over, the futures market. I think it's one of those markets that a lot of traders should really start looking into more. It's a much more regulated market. It's one of those markets that can't be heavily manipulated. It's not something that can be just disrupted like a stock where someone can say something, some crazy piece of news, and then all of a sudden it's just like skyrocketing or going down in the opposite way against you. It's like when you're trading wheat or you're trading grains or corn or something of that nature, orange juice, sugar, you're getting like what the price of that commodity is, because if those things got too out of whack, where price of orange juice was $15 a bottle, most people wouldn't pay for that, and that would put a lot of farmers out of business, So you got to make sure, that's part of why, commodities are so trendy. That's why I preach that a lot in my videos. I talk about that a lot, and I like to really point that out because you guys can really follow the trends in the futures market. So when it comes to commodities. So for this video, I'm going to go over wheat futures, and I'm going to show you guys how there are just so many opportunities to trade wheat futures and how we can really take advantage of the market and really learn how to follow a trend-based system and make sure that when you're following the trend lines, all you got to do is wait for it to break the trend line, and that's the entry, and that's the way to go. All right, guys, so let's get into this video, and let me show you how we can do that.
I'm coming in hot.
Okay, traders, let's take a look at what we got here today. Today I've got ZW, which stands for wheat, on the December 20th contract, and right now I have the 4-hour chart up here. You can see my top left of the screen. Now I know you're looking at the screen right now and you're thinking this looks like a lot of colorful things in terms of just red and green all over the place, and you're probably thinking this looks like a mumbo jumbo of shit. Yes, I get that. I would think the same thing too, but right now it's really zoomed out, and I'm just trying to give you guys the overall picture. So before you think too quickly about it, let's dive into it and let's see how we can really take advantage of what is on the screen right now and make it an opportunity for us to take entries in the market to really capitalize on what the market gives us. Okay, so what I want to show you guys today is how we can really discover a trend. The reason why I've got this zoomed out to the 4-hour chart is because I really want you guys to be able to see how to really analyze the chart in the making. What is the price telling us? What is it doing each time it comes up to a certain level? Okay, so right here, what I want to discover is, what I want to show you is, which direction is the overall trend right now? The overall trend is up. And what has price done the last 2 times it's come up to this high? It's come down, and it's come down again. Right now, we've broken past that. And as you can see, let's zoom in a little bit, price is starting to revert a little bit. I want to see, and I'm going to get ready to take a short at some point here. And I'm thinking it's probably going to come up at some point soon. It could break out of it, very well possibly could, but at the same time, I think as the wheat futures continue to maintain their price average, I think they're going to stay within this range, and it's going to come back down again. That's my personal technical analysis of feeling and fundamental feeling towards it. But, just so we can kind of discover how to really analyze this, you can sit here and draw your trend from here. You can see where price is continuing up in this trendward line right here. As you go further with it, price is really going steeper and steeper right now. So I would kind of look to see, price has broken out of this channel. You can see that it's done that. But that is one thing, that's one way to look at it. But let's see, price is coming back down. Sometimes price breaks out for a bit and then it comes back down. So for anyone who's new to my channel, I want to let you guys know that this is my proprietary system. These hedge fund levels, I call them hedge fund levels, these arrows on the screen. These red arrows on the screen represent a volume flush of liquidity. That basically means, there's a lot of big selling that's come into the market that's pushing the market down. And these green arrows represent a volume flush of buying liquidity that's entering the market. It's all based around time and sales in the market, when who is coming in and stepping in with the exact, that amount of contracts, however much it's based around. It's based around large pools of liquidity. So it's telling you when somebody big is entering the market. And it doesn't mean necessarily one institution. It means just a bundle of them when they're all coming in at that moment, because they're on that same consensus of thought. If you look to the left here, price has come down to this big support level. Price usually comes down to where it usually broke from. Right here, this is in the past where it broke. On the July 8th, right here at this time, it broke up to the upside. Price has come down now. August 10th, it trickled around for a bit, and around August 18th, it took off. As you can see, August 17th or so, roughly. Right there is where it based out and then took off again. That's what price does. It goes off it's based around historical data. So that's how my price and my hedge fund levels are, built around. So what I want to use, here, how I want to like look at the hedge fund levels and how we can really use them to our advantage, along with trend-based following systems. The trend lines are one of the most magical things in the world, guys. Trend lines, once they break, it's a thing of magic. There's something about it that's just that no one's invented trend lines. I'm not reinventing it. I'm just telling you that's what people follow. They follow the trends. They follow once it breaks. It's one of the strongest indicators out there, and that's why my hedge fund levels are built around trend line breaks. Okay, so that's how we have to look at using the hedge fund levels, because they give us opportunities to see the market in a way in which when something breaks to the upside or to the downside, you know that that is a very strong indication of which way the market is about to go. Okay, so for this system here, if you were to swing trade this, if you were following this trend over the course of the year, and you were looking at this right here, and you looked at this trade right here, and you saw and you had my hedge fund levels on the screen, what you would have done, when you want to look for a chance to go long, you look for falling reds. Falling red, falling red, falling red, falling red, rising red. Okay? But what you would have done prior to this is you would have had this drawn out. You would have had this line drawn out because the hedge fund levels are very strong when it comes to looking for opportunities to go long. Okay? Now I'm showing you this on a macro time frame. If you're curious about how this works on a micro time frame, go watch some of my other videos and you can see how you can really use this on intraday trades. This is just, I'm showing you how you guys can base this around following the trend right now. This is what this video is for, the purpose of this video. But this video is very strong. It's going to make a lot of sense on how to really follow the trend. Basically once these hedge fund levels break, once you see a falling green or a rising red, then you know that the price is about to go into a different direction. So here we can see that price was in a downward turn, as you can see, right when it broke the hedge fund levels. What did it do? We spin this forward and look what ends up happening. That's what they do. The same thing here. This is all small little falling trends within the overall uptrend. If we look here, falling red, falling red, falling red, falling red, falling red. What's this? Rising red. So here, what you do, how I trade the hedge fund levels, I look for it like this. Right here, let me get my smaller line so you can really see this better. Okay? When I do this, I start with this one. So let's say I'm following this from the very first day it starts. Okay? I draw this to here, and just for the video purpose, I'm going to draw this as a shorter line, but what I would really do, I would extend this line really far out. I would use one of these big ray lines. It would just be a big extended line. The next thing I would do is, okay, I see that price has not broken that line. You could say, yeah, price broke this line right here, but you can also see that price has also printed another hedge fund level to the downside, which is indicating price is going down, and it's still a falling red, so you have to be careful on how you're approaching the market with using this. So because of this being a falling red still, so this is a falling red, you have to be aware that this is still in a continuation of a downtrend. So what you do next is you draw this one to here. Does price ever break this line? It does not. So what do? You draw this one now. Does price ever break this line? It does not. Okay, so then you draw from this one to this one. Does price break the line? I'm sure you can see that price breaks the line. And that is your entry to go long. That's it. That's what you're looking to do. If we zoom this down to a micro time frame, you could really use the hedge fund levels to do intraday trading as well. I'm showing you how to do this on a macro time frame with a 4-hour chart. And this is how we can really take advantage of the market. So right here, rising green. Look at this. This is how we trade better, guys. We have a touch right here. This is where the pivot point of the market decided to take an upturn right here. Market decided to take an upturn right here, okay? In all reality, it was kind of down here, but we could just use this one for a bit, to make it easier to see. So right here is where price took the turn right here. Price comes up to this line, it stops here, and decides to come back down, and this is where it bounces at. Okay, so let's get ready to look for a short entry now that we're going up, now that we've already taken the turn to the upside. So as you can see, this is already happening. Rising green, rising green, rising green. So you would draw it like this. But you're already in this market, remember? You already took this trade to the upside. This is over the course of 2 to 3 days right here. That's it. 2 days. 2 days you would have made a crap ton of money on this trade. So right here, rising green, rising green. So you draw from this one now. This one doesn't break. What does this one do? We draw this one all the way out, like I said. And there you go. That is your entry to go short. That's it, guys. It's that simple. You wait for this price to break, you wait for it to break in this trend line, and that's all you're doing. So same thing here, falling red, falling red, falling red, falling red, draw these out. This is a very good strong indicator because they all line up very well. Boom, to the upside. There's your entry to go long. I'm showing you guys something that not a lot of people know about, not a lot of people are aware of. But the best thing about my hedge fund levels, I want to say the very number one thing about them is that they are a forward moving indicator. So it's waiting for a future indication of what to tell you to do in the market. You're not waiting on the lagging moving average or the lagging MACD or the lagging RSI or the VWAP that you hope is going to bounce off of this and do what you think it's going to do next. It's not something like that. I do like using the MACD, but I customize it in my own way. I like to thin out the line, but I like to only use it for divergence purposes. I think that, with the hedge fund levels, it really gives you an idea of when to enter the market. You really get to see how to enter the market because it's telling you based around certain volume and time. Volume and time and trend lines are your number one thing for trading, guys. You need to know who's entering the market and you need to know when to enter the market based off of what the big institutions are doing. So I hope this video makes some sense. If you guys are curious and want to use the hedge fund levels, make sure to get in contact with me. I offer a free one-on-one demo and I'm happy to give you guys a trial key for a couple days to use it and test drive it on your own. Let me know what you guys are thinking. Shoot me some comments in the video in the comment section. Go ahead and like and subscribe, and I appreciate you guys watching. Have a good day, guys, and happy trading.